Hello, friends. This is Gaurav Goyal from Ramoksha Investments. Today, I'm here to discuss an important geopolitical event that's happening at the moment. It's the Russian Ukraine conflict. It's important for all concerned, whether it is politicians, whether it is common man, whether it is the investor community. And why is it important? It's important because it's impacting all of us. More so the investor community because you know it's the stock market's corrected quite a bit. People have lost a lot of wealth, and we don't really know what's happening and what's likely to happen. It's an out of syllabus event. It's not something that was visualized uh, just out of corona crisis possibly. It may still resurface, but we think that it's practically we are out of it, and nobody had really thought that we can have another event, out of syllabus event, uh, which would suddenly overshadow everything else. And here it is. As we are sitting today, we don't exactly know what's really causing it, and what it can lead us into. So first of all, let me just give you a small brief as to why Ukraine. So Ukraine is at the center of Europe. On the eastern side, we have US, the Russia, and on the western side, we have the European countries in alliance with US, who have formed a organization called NATO. Now, Ukraine becomes strategically very important because an alliance of Ukraine with NATO, which it seemed that Ukraine was interested in having, would lead NATO alliance countries very close to the eastern side of um, Ukraine and at the doorstep of Russia. This creates a lot of problem militarily and strategically for Russia. Hence, Russia, in all respects, wants to avoid such a situation wherein it's facing uh, a big NATO alliance countries and possibly their military on its western borders. Hence, it tried to raise its concerns many times in the past, which were not really looked favorably by the West, and hence now put in because Russia still happens to be a military superpower, is exercising its might, and as of now, it's already, stepped into the Ukrainian soil and just wants to uh, take everything down and assert its supremacy in Ukraine. So, what we have seen because of this is a huge amount of chaos, confusion. First of all, nobody was ready to believe that we might end up being here, wherein we are witnessing a real war, and most of us assumed that wars are only physical wars are not yet to be not to be seen again, but here we are, we're staring at a physical war happening right in front of our eyes in Ukraine. Now, at the same time, the stock markets across the globe have corrected meaningfully. We are not alone in falling, and what we are seeing, witnessing, is a sharp decline in the stock prices across the globe. In India, we have seen a significant correction, and as of now, when we are sitting here, we are almost at almost 12% down on Nifty from its peak, which was seen in October. Bank Nifty is down by 13%, mid cap index by 16%, and a small cap index by 20% from its peak. Now, this begs a question as to what's likely to happen. And this, we all know, is an out of syllabus event. It's not something that is witnessed regularly. In my lifetime, I've not really seen physical war of this magnitude. We have seen 91 and 91 Iraq war, but a war between possibility of a war between two nuclear armed countries, and those scenarios make people very nervous. And however, I must say, from an investor community perspective, is that this is one of the many events. If you look at it from a long term perspective, there are out of syllabus events that happen from time to time uh, in the long term chart, if you look at it. So it's maybe once in a decade there could be a crisis of this nature. But the real worry, I think, is more for the short-term trader mentality investors. It's not really a worry, if you ask me, for long-term investors. In fact, the long-term investors who are willing to bide their time might see an opportunity to make huge amount of money because of crisis of this nature. So what's likely to happen? Since we are already corrected by a significant number, as I gave you the number, Nifty is corrected by 11%. The real portfolios are actually down much more than the numbers that I'm talking of. If you look at your portfolio perhaps, and a lot of other investors portfolio, equity portfolios I'm talking of, you will realize that actual portfolio has probably fallen by 25%, 30%. In some cases, some aggressive investors, it might have also fallen by more than 50%. So, where are we? Is this something that, I really think that from a long-term investor community perspective, it's a great opportunity wherein you can, if you have surplus money lying with you, you should invest immediately at least 30% of that, between 30 and 50% at this point of time. And you might not get an opportunity again unless the war manifests itself in something more. Now, what you can do right now is put 30% of this money at this point of time. If for some reason market falls further, and let's say by another 5 to 10%, then you add another 30%. And if it falls further by 10%, then add balance 40% of the surplus that you have. Now it's very important that you make use of this opportunity. We have seen many times in the past all those prudent investors who don't get nervous by the acts of by such kind of events. Markets have this unique ability of bouncing back very sharply, and hence the losses can be recouped in no time. uh, a word of caution is that it's an unpredictable event. We realize the fact that it can snowball into something big if um, NATO countries, let's say, for example, decide to retaliate in a physical warfare uh, methodology. Now, uh, but however, we feel that this will not happen, and we have already seen some signs of it, wherein um, Western countries have decided to impose economic sanctions rather than a military conflict. And I personally feel that this is the best way forward for markets, which is at this point of time fearing the worst outcome. And economic sanctions is perhaps a better way of dealing with such crisis. Economic sanctions on Russia can have some impact on Indian markets, as India traditionally have good amount of strategic dealings with Russia, especially on the defense side. But I don't think it will have an impact of this nature which we are experiencing right now. So I personally feel that FIs would probably are at the end of their selling cycle, and we should witness them coming back in full force if things stabilize from here. And I anticipate that probably in next 15 to 20 days things will stabilize soon. What might also happen is that Russia will dominate Ukraine militarily. Of course, Ukraine does not have a huge army of its own. They do not have the weapons, and they might have to surrender at some point of time. A puppet government, Russian government might be in place, and there would be tighter economic sanctions. We've seen some bit of sanctions already imposed, yet there would be meaningful global confrontation that's likely to happen, which is not militarily in nature. This could also strengthen some of the other countries like China and Taiwan, embolden them to take more drastic measures. However, um, I think things will continue to move with all these confrontations, and we will be on the path of economic recycle coming back in full force. So brace yourself for that. If you act wisely right now, we call it method in madness. If you can adopt a method in madness and do your strategic investments in the right way, the probability of you making money out of such crisis is quite good. So, all the best to all of you. I just thought I would share my views on it. Don't get panicky, don't get nervous, and all the very best to you. Thank you.